All right. Cool. So Vytas, thank you for taking time out of your day to connect with Jake and I. You definitely put out some good knowledge on social media about the work that you do in the industrial outdoor storage space and everything in between and everything that comes along with it. So please, share with I think with Jake mostly and also whoever happens to listen to this, your background, how you got into this. I've read some stuff about how you discovered the iOS space or, what you came across. But I do know you have some interesting background and you've worked on a lot of deals that I may bring up. So please, share with us sort of your background, how you got into it, and what you're doing today.
Absolutely. So I'm on the valuation side of the industry. Been a commercial real estate appraiser for about 15 years, specialized in industrial for most of that. Started first iOS property I appraised was probably a decade ago. A firm that I was with handled a lot of fund work for an ownership group. And, I walk in and they're like, "Hey, here's this container yard over by the intermodal. Like nobody else wants to do it. So, here you go." And I'm like, all right, what do I do with this? Then a couple of years pass and, do that every quarter and that's fine. But then some of the local investment groups started buying up. All right, well, here's another container yard. And it's like, well, you've done that before. So, and then here's a contractor's yard, and then, well, then, like I said on LinkedIn, like then Transport Properties
Yeah.
went out and bought a property in the stockyards that they were looking to do a, kind of bus repair facility with. Then they bought another one in the south suburbs. Then they did a new construction deal. And then that was really when it's like seeing their underwriting and seeing their numbers. I'm like, I got to really focus on this, really dig into it because it's one thing when it's like, all right, I'm in Chicago, so like you're looking and the CTA needs to park buses places, the other, you know, stuff like that, and that makes sense. And yeah, there's extra parking, but not a big deal. But then when it's like, all right, well, we've got this 3 acres of land that we're going to be getting, however many $1,000 a month for per acre, triple net. And I'm like, how does that work? Like you're paving it and that paving and fencing, that's your property. How are you generating it? So that was like 2019 when they did that development deal. And that like I said, that's when it kind of really started in earnest that, you know, this is its own kind of separate asset class that, you know, we need to really be looking at understanding the different metrics that are at play in iOS versus traditional industrial, understanding the different user groups and the depth of the tenant pool for these things. And also, just because it's land doesn't mean that you can't get credit tenancy in there. So yeah, that's kind of how I got into iOS. Since then, it's just been gangbusters. Everybody's looking to place capital in the space. So I talked to a lot of folks from, like I said, the mom and pops, who have a lot here. Guy who owns a moving company that happened to pick up a couple lots over the years to park his trucks. Now has a portfolio that's worth way more than he ever thought it would be. All the way up to talking to, life insurance companies who are looking to get into the space or debt funds that are lending on it, to and some of the biggest owners. So it's been a wild ride over the past few years, just seeing some of the names that have come into the space. Like, you know, when we first started doing this stuff, I would have never imagined that you would see the headline that Blackstone's doing almost $200 million loan to someone. So it's been really interesting to watch. It'll be interesting to see going forward, just what the rapid expansion of the space means. And if there are some people that are going to face some pain from just throwing money out there to chase the buzzword.
Yep. If I'm curious, Vitas, if we just back up 1 second, you mentioned your first deal was somewhere around a decade ago. Is that correct? When you kind of
Yeah.
first started looking at this space? So if that was a container depot, out of curiosity back then, pre iOS being headline news, how were you guys looking at this from a valuation perspective? Assuming that was, multi-tenant in nature, were you guys just using comps or, your land basis, or were you giving credit to any of that income stream at the time?
So that one way back in the day, it was interesting because, like I said, that one was essentially on an intermodal facility for, and we were doing it for who was essentially the developer of the intermodal. And they developed them nationally. So they could say, hey, we may not have any other container yard data here in Chicago, but here's our location over in a different market where we're getting these rents. So that was one of those where I didn't understand at the time, but that the opacity of the space and the lack of data, we were kind of leaning on them to say, hey, this is what you can get for container stacking. And I've since discovered how difficult it is to get zoning to allow you to stack 6 high. Did a 70-acre container yard couple months back, and that was the whole thing. These guys said, we can never move because, you know, we have the ability to stack 7 high. Our machinery only goes 6, but, we can't go anywhere else because the most that we can stack anywhere else is maybe 3 if they allow us to stack at all. So, especially with kind of the intermodal, the multimodal kind of port type locations, those guys need to be in that location. And there aren't the alternatives to go another exit down the highway. That's the location, and they can't go anywhere.
So you've got, this opaque data set that you're kind of you're having to correlate maybe different markets or different types of operations that might not directly fit into the box that, the asset that you're currently trying to value, right? I'm talking 10 years ago. Let's say you agree with whoever your client is that's telling you this is another site, this is what been able to produce an income. Say you take that guy's word for it and you agree with that valuation. At the time, were these developers or otherwise buyers able to take that to the bank and have any success in financing, or was it all cash? Was it private money?
It was a significantly harder pitch back then. I mean, even today, 10 years later, I'm still having to regularly have conversations with lenders, just here's why we're looking at this in this way. Here's the data that, like, yeah, it's a 20% coverage or, in some cases, even no building. Um, but yeah, 10 years ago, it was, well, why isn't this just an interim land use for future development? And, the stuff we were doing back then was primarily stuff that didn't have great site geometry. So, you didn't have someone taking that nice rectangular 10-acre parcel, that could be developed to a higher density and stacking containers on it. You had someone taking that weird triangular parcel that was kind of the leftover from the park, um, you know, for the most part. These guys, like I said, they had an intermodal facility, so they understood the 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 demand driver there. So they took a pretty decent parcel that they could have thrown a small bay building on. But at the end of the day, if you're adjacent to an intermodal, you don't want small bay. If you're that close to, that kind of shipping, you need either a, larger box logistics facility or you need outdoor storage.
Right.
So
And
yeah,
and do
that,
you
that
find you're still getting resistance commonly from or frequently from lenders even today?
it all depends on kind of where they're at in their process of understanding. So
Sure.
some of the folks that we've worked with, some of the small local lenders, these are relationship driven deals, and they've been working with whatever transportation company for a long time. That's fine, and they're underwriting the business's financials just as much as they're underwriting the real estate, and the appraisal doesn't matter as much to them. But they're always still shocked when, you know, we're looking at a piece of property near O'Hare, and now, they got it appraised 5 years ago, and now the value is, 5x what it was. So, that's where some of the challenge comes in. They don't necessarily have a problem with the asset type. Hey, we've had this on the books for 30 years, and now you're saying it's worth a significantly higher amount. Part of it's educating them on, hey, you got guys like Blackstone, you got really well capitalized groups out there, who have pension funds as their investors, taking this stuff down at these prices. So, uh, yeah. And then on the flip side, with some of the larger lenders, they need more data to be able to substantiate any sort of capital outlay in the space. So, you know, the lack of transparency in the space, I think, has really kind of hindered some of the other big players. Blackstone typically do what Blackstone wants to do, and they have a track record that, you know, just about nobody can match. So, they have their risk tolerances, whereas if you get to some of the large conventional bank lenders, their risk tolerances are very different. But they may need more data, and just the lack of transparency in the space makes it a hard sell for some of those guys.
Yep. There's some guys that are trying to tackle the data issue now. Matt Hunsucker, if you've spoken to him, I'm sure you have at iOS List. He's putting together some good data sets. I'm curious on you mentioned a lot of these owner users that might have, super low basis, being surprised at the current valuation of assets that they otherwise use for their business. I'm curious if you've seen more sale leaseback activity due to that, free up some capital, put it to work in the business, maintain
Yeah,
control of the
and I think
property.
that's been one of the big drivers to just transactions lately. Just like every industry, the trucking industry particular has, a fair amount of, older operators that are looking to cash out and, head into retirement. It may take them some time to unwind their business, you know, but they want to be able to do that over the course of 6 months, 12 months, 18 months. So we've been seeing a lot of those types of kind of short-term sale leasebacks for these guys where an investor is a much better potential buyer, even though they may not be, the highest price, because that gives them time to, if I'm shuttering the business, I need to get rid of my fleet. I don't want to liquidate everything. I want to, sell it in an orderly manner. So, that's been one of the big things we've seen is a lot of those short-term sale leasebacks where then, the investor will come in, typically throw some capital into it, whether it's, taking a gravel lot and making it, asphalt or concrete, depending on the market, putting in kind of modern standard lighting and security, you know, kind of freshening up the building if there is one. And then they'll be able to get rents significantly above what it would have been as a gravel lot that maybe had a chain link fence but no gate. They're kind of changing that product, and that's what's been able to really boost returns for those guys.
Yep. And another question, I'm just rapid firing as they come up
Absolutely.
because the conversation's interesting, but I know I'm kind of taking this a bunch of different directions, but for those of you listening to this who don't know, we operate pretty much exclusively in the managed parking space. I'm curious if you've seen a ton of those deals get done, challenges, learnings, how that's evolved over time.
So that's been an interesting. I think there's been more of an influx in that lately with just kind of the growth of some of the firms that are in that space. I did what was pitched as the new largest truck stop in America. It was like a 1,000 plus trailer parking site in the Chicago MSA. They said they took the title from Iowa 80.
We've heard a few guys tell us that they're going to be the new largest, so we'll see who gets it done.
Yeah. So, like that one, managed truck operator ended up, from what I understand, they ended up buying it. I did it for the original developer, um, you know, for the lending purposes. And from our perspective, the way that that one worked, we were assuming that someone would come and lease the entire site as opposed to do a managed truck revenue share type agreement. So even when we've got, even someone like Freight Ninja who will do it, whether they'll do the revenue share or they'll lease it, we tend to look more at the lease side of things because most investors will prefer to have it leased as opposed to take on the additional risk of the revenue share. So we're typically not really looking at the managed truck parking from kind of an operator standpoint. But even when we're looking at it from a lease standpoint, one of the things that we always just sanity check is, all right, you can get $400 per spot per month on this lot. How many spots is that per acre? What's the income per acre? What's a reasonable vacancy rate? And all right, this is the number that they can support and rent for this site. We're not totally detaching kind of that operational side of things from the investment side of things, but it's it's always interesting to see how that math works out. And it's like almost that would almost be kind of akin to how people value like hotels,
Yeah.
because you're looking at, all right, what's the revenue per room per night, all that kind of stuff. So
That conversation always interests me because most people think that if like by default in a blanket statement, if you run managed parking, so you're taking on the additional risk and the additional headache of having, say 200 different tenants on wheels versus looking at a single, tenant net lease type property, you would think that the managed parking operator does, should be earning a higher return, but it's often not the case. I mean, there's some markets where that's true, but we've found mostly, if you have a well located outdoor storage facility, there's going to be an end user there somewhere that's willing to pay more than what you could generate in managed truck parking, even if you were the direct operator, let alone if you partnered with a management company that was going to take, a VIG, do a rev share agreement with you, or the manager might take the risk of signing a lease, but those managers are only going to sign that lease and create all that exposure if they feel real good about the amount of money that they're going to make. So that's part of the reason why I personally think, I say this all the time and everyone kind of fights me on it, I think truck parking rates have so much room to grow. Like in all the major freight markets that we operate in, there's still, I'm not going to give a blanket statement, but occupancy and managed parking is very high in most major freight markets. If I just pick South Florida, for example, we have a few customers down here that basically operate at 100% effective occupancy. Like they may churn a couple of guys every month, but they're backfilled in the first 5 days, right? They don't increase their rates. Like we've got one guy that's been charging, the same rate he was charging in 2022, he's charging in 2025. There's been absolutely no increase. He's happy with what he's earning out of there. But I think managed parking rates have room to grow a ton. And, we've got some stuff coming out that will hopefully encourage landlords to do so.
so
But always an interesting conversation. Yeah.
yeah, with that, one of the things that I've been hearing just over the last couple of years as rents have really exploded is that, if you're running managed parking or if your kind of target tenant base is more your local operators as opposed to, the national operators, tenants are having a harder and harder time absorbing some of these costs. So like if you're a trucking company in South Florida, you have your margins and, increasing rent by $100 a spot a month, like that may make it no longer a profitable
Yep.
business for you. Because from what I understand, the margins on trucking and logistics companies are relatively slim relative to the risk.
They are.
So, I'm curious how you guys are. Is there a natural ceiling for rents? With regard to the local operators versus the national operators? How do you guys look at that?
There's definitely a ceiling. I just don't think anybody's found it yet. Like if you, I'll pick South Florida again because it's our backyard. our customer down here that hasn't moved rates in 3 years, right? He's got a competitor that's charging $220 a space more. So if you look at that as a percentage, it's about 40% increase, right? That other yard is also full, right? So
Hmm.
there's some equilibrium, right? There, I think from a fundamental kind of economics perspective, the increase in cost is going to get passed through to the consumer at some point. But the managed parking space is, in my opinion, it's too fragmented right now for it to really be an efficient market. As these operators start getting consolidated and operators, get some scale or get control of a certain market, I think we'll find where that is. But I think the point remains, take that example I just gave you. There's room to go up.
Yeah, and that makes sense because I've been so I work with our research group to put out, you know, we started a research series, and we've got one that should hopefully be coming out in the next week or two on equipment rental. But the next one that I'm looking to tackle is truck parking.
Sure.
And as part of that, I've kind of started to dig around a little bit, and yeah, everybody's always been talking about the shortage and all that stuff, and it blows my mind sometimes just looking at the numbers. It's like there's something like 40,000 truck parking spots at public rest areas across the
Right.
entire country. Like how is it across the continental United States?
Who knows what the real number is, right? Like when we started this business, in 2021, everyone was using that, 300,000 truck parking spaces for 3.5 million drivers. I don't think that's really an accurate metric to even track because there's way more pieces of equipment than drivers, right? They're just not always in circulation. And people today, so 4 years later, are still saying that that's accurate when we obviously know that there's been a ton of truck parking built in the last 4 years. Not enough, but I don't think that statistic is really accurate any longer. Now, it's in our anecdotal experience, it's probably worse than that in major land constrained MSAs. South Florida, Port Newark, Port Long Beach, that's probably worse. There's probably more than 11 drivers per space in those markets. But if you go into the middle of the country somewhere, I mean, there's a ton of land, there's a ton of truck parking. Occupancy is, typically nowhere near what those primary markets are able to maintain. So interesting for sure. We'll see where it shakes out. Who's going to do the real analysis to find out how many spaces there are?
That's the hard part, because it's like, all right, well, Travel America says they've got X number, and like
Right.
and even those are easy. It's once you get into the managed truck guys where it's like, all right, well, I can't really get all of your data without, you don't just put out there that, yeah, we've got 10,000 spaces,
Yeah.
nationally. Like
Yeah.
it's so, uh, but it's interesting to see. The other thing that I've heard is that, with, particularly with trucking, there's been almost an arms race with some of the amenities that it may not be in the managed trucking space, but more in the repair facilities and that type of stuff where, you know, if you don't have a nice driver lounge and shower areas, that kind of stuff, you can have all the space in the world and you could park everything, but you're not going to have drivers to drive those trucks. So have you guys seen kind of the increases in kind of demands from tenants and users for at least basic amenities so that they can attract employees?
Short answer is yes. I mean, it's market driven. So it's going to be interesting for us to see how that plays out in a market like Dallas or Fort Worth, right? A lot of land available, not super restrictive on zoning if you're outside, their municipal boundaries. And that's where we're seeing a lot of these like, driver lounge, movie theater, restaurant, free Wi Fi, the whole nine. And rates over there are pretty low. Like they're, 150 to $200 for a truck and trailer. Whereas you compare that to South Florida, I mean, you could literally gravel any piece of property anywhere in the county, put a fence around it with a gate and some lighting, and it's going to be full. You do not have to do anything else. So if you look at like just using DFW as an example, where is that line, right? It's kind of like what you were asking me before about where's the ceiling on rates for the smaller guys. It's like, well, how much can you really afford to spend on improvements, and capital expenditures on a property that you're only ever going to be able to generate, $150 a spot per month for? Those amenities also are, we find that they're like, those sites are optimizing more for overnight parking, right? The transient guy that's, out of hours of service and needs to stay for a day. I think that's another kind of evolving sort of concept in the space. The mom and pop style operators typically don't like offering daily parking if they don't have to, because, there's a perceived additional, you know, managerial burden associated with that. It's more like your hotel operation, but I think that's most likely where a lot of these sites in major markets are going to end up, right? Because these sites are 100% effective occupancy, right? But they're not actually physically 100% occupied 100% of the time. So I think if we could, facilitate, give landlords the ability to bill based on actual usage, it'll definitely generate more revenue for the landlord. And hopefully, we're doing an analysis on this now. The idea is it'll be comparable to the driver or the carrier, right? If they're not paying for spaces that they're not really using all the time,
Mhm.
we think that'll help both sides.
Yeah, and it seems like, at least on the face of it, that the amenities and like, all of that, like I said, it's kind of the overnight transient guys. So like for you
Right.
guys in South Florida, you know, you're an endpoint. Like
Yeah.
someone is starting in Florida or starting, wherever, and that's where they're stopping. Like you can't go any further south, you know.
Yep.
Uh,
But
whereas,
you just can't get a semi truck down there,
yeah,
or it would be very difficult to.
yeah, I can't imagine driving through the Keys with the semi, but
I've only seen a few down there.
for markets like DFW and most of the markets that I cover, we're a spot on the map along, whether it's I-80, I-55, 57, 65. We're a stop for someone for the mandated rest. So it's interesting to see, it'll be interesting to see how just the fundamental structure of the same product type can differ
Yep.
between where it is on that logistics chain.
Yep. Well, cool.
Yep.
I covered everything. I kind of jumped around a lot there, Vitas, but I covered, a lot there. If there's something else, Jose, that you want to go over.
I mean, Vytas, do you have anything you want to mention?
No, I could talk about this stuff for hours,
Yeah.
like that's I always tell people that like, I'm always more than happy to talk about this stuff because it's just it's been just so interesting watching the maturation of the space, the amount of capital coming into it. And, you know, I think one of the things that will be interesting to see is if, some of this money chasing this space, if they dive into buying some of the mom and pop truck lots for, short-term sale lease back, like, do they fully understand if they're going to operate it, what that actually entails? Will they have to bring on a partner? Are they willing to get into the more operational real estate? Or did they buy this because they saw iOS rents have gone up 30% and we should be able to lease this no problem? And if
We've seen a huge change in that sort of tolerance. I mean, 2 years ago, you brought up managed parking to any sort of, regional fund, let alone the institutional guys. It was like that was the end of the conversation. Now, they're coming around to the idea that even if it's for a short term, you can generate some revenue out of this site while you've got, your CBRE or your Cushman sign out front marketing to the net lease user,
or your
you know,
Collier sign, right?
or your Collier sign, sorry. Right. So, I think over time the institutions will actually not take us up directly, but they'll utilize that as a tool, right? If you're buying a site, say it's 10 acres, it's got 250 guys, say there are 250 separate owner operator tenants that are currently paying rent, right? And you have the means to operate that site for a little while using technology while you're marketing it to the net lease user. Why wouldn't you do that, right? It reduces your vacancy cost and it's not a tremendous amount of risk, right? You really don't need that much infrastructure. You use some tech and then, use some contract labor on an as needed basis if you need to send someone to the facility. So they're coming around to that and I expect that to improve over time.
It'll be interesting to see how the banks and, lenders look at that, just because operational real estate is always, there's very different interest rates if you're lending on
Yes.
business income, which you could argue that managed truck parking is, versus a lease where you're here for five
Yeah.
years, you're here for 3 years, as opposed to,
Yeah, but I'm saying these guys are already buying the site. It's managed
yeah,
parking currently, right? So they're going to buy the site, and then instead of keeping that income stream, they're going to spend, a ton of money, effort, and time to vacate the site to, lose the revenue stream to then have it, readily
yeah.
available for that net lease user. Like it doesn't make any sense to me because these are all short-term revocable license. You can terminate these at any time with, very short notice provisions.
And especially with, if there are kind of COVID era shortages of, anything, I still hear people saying that switch gears are taking forever, you know. So it's like, all right, if I can't get a switch gear for, 9 months anyway, like I might as well just keep collecting, that interim income. And, so yeah, but it's been a fascinating space to watch and track and, be a little bit of a part of. And it'll be interesting to see how things go forward. And, it just, yeah, I love the space. Like it's a lot of fun. Part of it is because I think I've got good relationships in the niche. So, that,
Small worlds for sure.
yeah, like one of the guys who's one of my good contacts, I went to high school with his older brother. Like, and we didn't realize this until like, way down the line, you know. So it's just, yeah, it's a lot of fun. Are you guys heading to Dallas for the NAAS conference?
Yes, we'll be there.
Well, I'll have to make sure to find you guys because I'm planning on being there as well. So,
Sounds good, sir. Well, thanks for taking the time to speak with us and take my barrage of questions. If people want to find you, what's the best way to do so? LinkedIn?
yeah, best way is LinkedIn. I've got my email address on there as well. Um, Yep. Trying to stay current with stuff. It's been a little bit challenging because we've got a 13-week-old. So,
Yeah, that's right.
yeah, she takes up some time, as
Congratulations.
does our 3.5-year-old. So, you know, try to put reasonably informative stuff out there whenever I can.
Sure.
But if I'm quiet for a while, it's because things got a little crazier around here.
Keep putting that stuff out there because that's how we found you. And if you want to talk more about truck parking for that new series you're doing, give us a call.
Absolutely.
All
Thanks,
right,
Thanks,
guys.
sir.
Vytas.
Stay on, Vitas.